What is going on YouTube? Hidden back making another brand new Crypto TV episode. In today's video, we are looking at XRP, Ethereum, Bitcoin, as well as the S&P 500. So yesterday's video, we made a discovery. Hopefully you guys watched it in yesterday's video. If not, today we're going to touch upon it a little bit here. But as you guys can see with the thumbnail, we made a discovery. We had slightly tweaked, or originally we didn't tweak the price ceiling and price floor of our Ethereum sideways channel that we were trading in for quite a long time here. And things just weren't adding up. Not really making sense ideally, so we slightly tweaked the top resistance, the price ceiling on the Ethereum channel here. You can see moved it just up a little bit here, but I'll show you guys in depth in a second, and that has now allowed us to find a solid price resistance and price ceiling that we can use to better ourselves in regards to our trades. So I'm super excited that that happened here. We are also going to be looking at things like XRP, which is hanging on for dear life to its bottom support right here. We're also going to be looking at Ethereum, which is hitting resistance at the top, Bitcoin, which is starting to slide lower here, and the S&P 500, which is getting pushed out and squeezed out, and is most likely going to see correction probably in the next couple of days here, and I'll explain why I believe that is in a second with you. But with all that being said, definitely make sure to smash the like button, turn on post notifications, subscribe, and let's dive into today's episode. So guys, super quick before we dive into today's video, I just wanted to give a huge shout out to today's sponsor, COINLEDGER. For those that don't know, a continued sponsor, as I've said. For those that don't know what COINLEDGER is, basically they are a way for you to do your crypto taxes in minutes. As you guys know, last year has come to an end, unfortunately, or maybe fortunately in this case here. And now we're in 2023, which means we have to do our taxes by April. I think April 15th or something like that. If your taxes are not done by then, you're going to have some problems here. But you definitely need to do your cryptocurrency taxes. What a lot of people don't realize is if you have made trades over $600 now that this new tax law or whatever has come out here, Coinbase will send like 1099 potentially to you, or they might not. Regardless, if you've used Coinbase, even if you haven't made profit, but have just made trades using Coinbase or have transferred money into Coinbase, they don't know that that's profit or losses. That's up to you to figure out and sort and show the IRS, which is unfortunate, but it's a pain in the butt. And honestly, what we used to do, this is a couple years ago, which was very annoying here. I had to manually look at each profit and loss, compare it all, add them all up for my account because I would have had to pay him more money. But since then, we've now come a long way, and now we have websites like COINLEDGER, and they do it for you super quick. You connect Coinbase, which I've done, or whatever cryptocurrency exchanges you've used, and they do it all for you simultaneously. But with that being said, they are linked down in the description if you want to check them out earlier, but I do want to dive into the technical analysis today. As you guys can see here on the current coin market cap, we are consolidating and are starting to skew lower here. Everything over the past, I'd say 7 days, is starting to drop about 5%. Bitcoin's down 4.6. We have XRP down 4.7, Cardano down 4.7. Everything is sliding lower. You can clearly see it here over the past week in regards to these downtrends that are forming for the most part on the cryptocurrencies. XRP, Cardano, Doge, everything is sliding lower. And you can see why that is when we jump to things like XRP here. We're also going to be looking at what I really want to focus on are these three: Ethereum, S&P 500, and Bitcoin here. But for right now, looking at XRP, we are skewing lower. I've said numerous times on numerous occasions in numerous videos that we are long-term bullish on XRP, and I would be very surprised if we weren't at about 50 to potentially 90 cents by, I'd say, July or August of this year here. But for right now, we are starting to dip lower. We are breaking downwards from this uptrend here. You can get a better view if I jump to the 4-hour that we were in a higher low standpoint here, and we just had a bearish cross right here. Not only on the, or right here, we had the bearish cross on the moving averages on the 4-hour here. We have broken through the supports and we are starting to fall lower, correcting outside of this like ascending triangle right here, or symmetrical triangle right here. So we are starting to break lower, and there's a good chance this is going to continue to scale us downwards here. And I think there's also a big chance that it's going to fall down with the other cryptocurrencies. Now, we did have a bullish cross on the daily here. We are getting kind of hung up on the support here. So I'd say the lowest we would drop to is maybe 37, 36 cents here, mainly because I think XRP is kind of acting independent from things like Ethereum and Bitcoin and the S&P 500 here. So the likelihood we continue to dip is probably very small, that we would continue to fall further than maybe 37 cents here. But regardless, I am more of a long-term trader right now. We did buy in once we saw the weekly confirmation close us above the major purple downtrend here. So once we confirmed closing right at 38 cents, we bought in. I know we're slightly higher than that, and we have dipped higher than that as well. But I do believe we are going to continue this correction, and that small little pullbacks to the downside are necessary for us to continue to pump higher. We were retesting overbought at one point here. Now, really quickly, I do want to go over to CoinLedger with you, though. I want to give a huge shout out to CoinLedger for sponsoring today's episode. As with all cryptocurrency projects, please do your own research. With that being said, CoinLedger is not your typical run-of-the-mill meme coin. It's actually a cryptocurrency and NFT tax software that's built to save you time and maximize your refund. With tax season right around the corner, you might want to listen up. Now, believe it or not, my accountant who does my cryptocurrency taxes recommended me to use a software like CoinLedger to help track my portfolio. Let me be the first to tell you, manually balancing all your trades is tremendously difficult and takes hours of your time. Trust me, I've tried, been there, done that. With CoinLedger, that process takes only minutes using their software, and your accountant will appreciate you doing this. Some of you might not know, but CoinLedger helps you take advantage of your crypto tax loss harvesting, which lets you claim losses on assets in order to use those losses to offset your capital gains, thereby lowering your tax burden at the end of the year. Also, guys, make sure to ask your accountant, but I'm pretty sure there isn't even a wash sale rule yet on cryptocurrency, which is quite beneficial. The best part is CoinLedger is completely free to use. You can import all your crypto transaction history, view your net capital gains and losses, and even track your portfolio. Payment is only required when you want to download and view your full tax report, and payment is broken down into 4 different tiers depending on the type of trader you are, and all reports are a one-time purchase per tax season. They're even giving away a $300 tax report each week of the tax season, which you can enter down in the description of today's video. Now, in the eyes of the IRS, cryptocurrency is considered to be property, and capital gains and losses need to be reported on a Schedule D and Form 8949 if necessary every year. And if you're trading on a centralized exchange like Coinbase or Binance, then you have no choice but to report it. If you don't know, Coinbase reports all your cryptocurrency transactions to the IRS before the start of tax filing season. And as a Coinbase customer, you'll most likely receive a 1099 form if you pay US taxes and earn crypto gains over $600. And it's up to you to prove if those gains were actually losses or if they were actually gains. Now, this is where CoinLedger comes in. They will calculate your crypto taxes in 20 minutes and provide you with the correct instant crypto tax forms. They support all exchanges, NFTs, DeFi, and 10,000 cryptocurrencies. And all it takes is 3 easy steps. First, you connect your exchange to their website and import all your transactions. You'll then preview your report, make sure everything is correct, and lastly, generate your report. It's literally that easy. CoinLedger integrates directly with your favorite platforms to make it easy to import your historical transactions. Whether you're trading, earning interest, or even buying NFTs, you'll be able to import your transactions and calculate your taxes with ease. They're even partnered with the largest tax preparation platform to make it easier than ever to report your crypto gains and losses. Your reports can be directly imported into TurboTax Online, TurboTax Desktop, TaxAct, and many other tax platforms. And even if you aren't from the US, you can still generate your crypto gains, losses, and income reports in your native currency. Then you can use those reports to complete the tax forms for your country. With that being said, CoinLedger is the go-to place when it comes to anything related to crypto taxes. And if you want to check out their website and use their software for free, then make sure to click the link down in the description of today's video. With that being said, shout out to CoinLedger for sponsoring today's episode, and let's get back into today's video. So guys, diving into Ethereum and these other cryptocurrencies, yesterday we had a pretty big discovery, and I'm actually very happy that we found this here. I don't know why those lines were deleted, but you can see clear as day here that we were trading inside a major symmetrical triangle, very similar to what we've dealt with in the past here. You can see history has repeated itself. We've had a dump into a symmetrical triangle, a bullish break that has caught us into here, and you can see I can literally take this, move it over here, and the same exact thing has happened. Now, if I could scale it up a little bit more, that would be great, but you can pretty much get the gist that the same exact thing is happening again. We had another dump, symmetrical triangle, bullish break to the upside, and here we are trending right inside the channel here. So history is clearly repeating itself, and we are having the same things happening over and over and over again here. But what's interesting to me is how we've been holding on to this. We started a break to the upside here. We formed another symmetrical triangle. This one usually has a bearish bias. You can see it's a flip. When it's a drop inside of it, we see a run to the upside, but when we flip into here, they tend to have a downwards break. So I was a little confused when we rallied outside of it, but I did say, and I also believe that we do have clear as day price ceilings and price floors. And depending on where we confirm closure here, this is an opportunity to buy in. Now, obviously, a conservative scale, had we have waited for the daily to close us at 13.3, we would be able to take advantage of this, not necessarily this run. If you want to be more aggressive, you could have taken advantage of it. Potentially on the 4 hour, it would have given you a little bit more opportunity. You can see right here, if I delete these, if you want to play an aggressive game, the second we closed right here, or maybe here anywhere in these, 12 hours, you would have been able to buy in with the expectations of continued drops to the downside here. But that's if you want to play it aggressive on Ethereum. We like to be more, I like to be more conservative here. So what I'm looking for again is the same exact thing. Are we going to break through this resistance? Are we going to break through this floor? We've now slightly tweaked the resistance from yesterday here. This was a little bit lower. We had this probably downwards about here. But over the couple of days, I was like, this just doesn't look right. And we are forming a new top. So I did move this slightly, and now it makes sense, and it's much easier to track. I have a good feeling we are kind of 50-50 on a bullish break to the upside or a bearish break to the downside here. But I have a feeling we're definitely more so headed to the downside here. Now, you could, take a more aggressive trade and short this here, or what you could also do is leverage to the upside. So depending on how we want to see movement here, if we confirm closing above this, we along this to the upside once we confirm closer above here on the daily, and vice versa. You can also short this, inside of here if you want to be aggressive. But if we confirm waiting for a break below 1510, we confirm closure below here, then we can short to the downside. So that's something you guys should pay attention to too, is truly just how we go about closing or breaking above here. Obviously, we're going to be getting involved in that trade on BitFi, the #1 cryptocurrency leveraging exchange that I like to use here on the channel. Buy long, sell short, leverage trades, stop losses, everything you can possibly think of, I do on BitFi. They even offer a demo account. Link is down in the description as well if you wanted to check this out. But moving forward here from Ethereum, the reason I think Ethereum is the best to watch right now is because of how easily we've drawn supports and resistances. It makes tracking this and tracking the rest of the market that much easier. Now, Bitcoin is starting to spiral lower here. We were nearing overbought. We're starting to come back out of that, back down to 58. We were extremely overbought. We're starting to come back down out of that here. But the main concern is with the S&P. That is kind of teeter-tottering a bit higher than we should be here. Now, we did close the weekly below here last week, and you can see we have maybe a few more days to see how this plays out. You can see last week we shot up, and we closed right here. And this week, we shot up a little bit, and now we're trading below here again. And I believe this is going to cause rejection. I really, really, really do believe we are going to be rejected off here. I'd be shocked if we see otherwise here. But again, we're pulling back down below here. And the longer we hang out here, you can see the longer it squeezes us in. The longer we hang out here, the higher this white band goes, and the more we trade inside the channel that I was originally saying we needed to stay inside, right inside here. So the longer we get squeezed in here, the more possibilities that we stay in this kind of movement here, in this realm, and then there's a good chance of correction to the downside. And I'm still a strong believer that a dip is necessary, even if it's a small one like that. That would still, in line with the higher low movements that we're starting to see, which is exciting here. And I do believe if this does decide to fall on the S&P, it is going to pull things like Bitcoin and Ethereum and potentially XRP down with it. That being said, smash the like button. Huge shout out to COINLEDGER for sponsoring today's episode, and I'll see you in tomorrow's video. Peace.